Well, what a day. Um, you know that bitch who mistimes their entry and then holds all day and then sells for slightly less than break even right before the original plan plays out? Well, that was me today. Only it wasn't slightly less than break even. So, let's go over my trades. My puts on Chris will finally expire worthless for at 5 p.m. Eastern today, and then I won't have to look at them anymore. So that'll be nice. I'm going to do a whole video on this stupid face. Okay, BLNK, obviously I felt that it was, oh my god. Obviously I felt that it was overextended. It had a heck of a run. It broke out the other day. I expected a pullback. And why are you like this? Who hurt you? So I was feeling kind of brave right in here. Yeah. And I grabbed 37 puts. And was it here? No, I let it come back. I let it test. And I grabbed some 37 puts. But then in here, it looked like a buying climax. I thought that it might recover and go, and so I sold my puts. That was my big win for the day, I suppose. But it looks like if I had just waited, maybe, to get those, I could have played it differently and had more profits. So today I really learned about 0 DTE options. 0 DTE, 0 days till expiry, which means that all of the options that I played today become worthless at the end of the day, or they exercise. So as the day goes on, they rapidly lose value if they're out of the money, and they they rapidly lose money if they're, or value if they're out of the money. So as they're out of the money and as time goes by, they become worth less. So I think there's probably a chart you can Google. It's called time decay or theta decay. And basically, if this stock stayed sideways all day, then, and it was a 0 DTE, then by the end of the day, the price of the option is dropping. And I don't think I can bring up an options chain on stocks to trade. So you'll just have to take my word for it. Anyway, I got scared right in here somewhere, sold my put for a small profit, moved on with my life. MVIS. I bought a $5 put yesterday. I feel that this stock is overextended. Could it go more? Absolutely. Did I think it would go more? Absolutely not. I bought a $5 put right here yesterday, and I was really proud of my timing on that. Because to all intents and purposes, it looks like the top. And yesterday, to be fair, it was the top. The breakout was in the threes, although one could argue this is a multi-day breakout straight out of trading the tickums, trader tickers. Trade the ticker. by Trading Tickers by Tim Grittani. But you can see it had this spike on Wednesday, and then on Thursday it consolidated, put in a nice base, and then, I'm sorry, on Wednesday, Tuesday, Wednesday, Thursday, today. It put in this nice base on Wednesday, and then it broke this high. This is after hours, so it was low volume, so one has to wonder about the validity of its move. Broke this high on Thursday, yesterday. And obviously that's a multi-day breakout, that's a bullish pattern, that's not something you want to bet against, probably. I bet against it a lot. At this mark, I bought a $4 put because I think they're $1 increments or something. No, it was at this mark. I bought a $4 put. And then when it was up here, I was thinking, I got caught in the scream because I didn't wait long enough. And I was thinking about grabbing 450 puts, but I was already bent on this trade, and I was like, that's dumb. You're just adding to losers or whatever. So I didn't get it. I didn't stop out of this one in time. But when it got up here, I was like, okay, really, this is overextended. I just keep hearing Tim Bowen's voice in my head, and he's like, there's no such thing as overextended. What do you mean overextended? Well, what I mean is it's way the fuck off of its support, Mr. Bowen. So, like, what is that's 25% off of its support? This is the support level? Like, that's really low risk to reward if you're going long. Maybe not here, but up here, like, who the fuck is buying this? Apparently a lot of people, probably other shorts. So I got my $5 put right here, and I was really proud of the target. I was proud of how I managed the trade. Actually, I made my money back on my $4 put because when it broke 5, I grabbed some shares, I let it ride until I paid for the put, and yeah, so I broke even on this mistake, and then I made this mistake. So why was this a mistake? Well, in the short term, it was not. I mean, it came right back down into the close. It was a very nice looking position. But then of course it ran in during extended hours because it's short squeeze Friday. And so all of these meanie bulls wanted to torture us bears. And so yeah, we got this short squeeze, and I added in here. I grabbed another $5 put. And I got this one for, actually I got this one for 10 cents, so that's not too bad. Or no, I got this one for 10 cents, and I got the other one, got it right here, for 10 cents. So I guess it wasn't as bad as I thought. It must have been cheaper because, no, that's not possible because my average price was 23 cents. So I must have paid like 50 cents for this one and 10 cents for this one. So then it came down. I tried to take profits in here, but I didn't get filled. And then of course it ran back. And then when it came back down, I sold them for 5 cents each for kind of a nasty loss there. And now I have a longer term put because I don't have a margin account and I don't think that this is gonna hold 5. Like, I mean, it's ridiculous, and the market can be ridiculous, and I might be absolutely wrong. So what's my risk for this trade? My risk is going to be 550. If it breaks back over 550, I'm gonna close out my long-term position. So that was MVIS. Let's go see Riot. I messed this up so bad. I think it's going to reverse, honestly. At the end of the day, I was thinking about buying calls. With Bitcoin staying steady and and all the support below, this is kind of mid-range. But it had run up and it was pulling back. I missed the play yesterday. And then it gapped down today, as you can see, but I didn't play by the rules. To me, this was the first red day. People were calling this the first red day, and I guess they're technically right. But it spent most of the time above the previous close. It barely went red at the end of the day. So I did not think of this as the first red day, which might be a mistake on my part, because I'm not as familiar with all the bearish pattern terms. So they said this was the first red day, and I can see that it was having a hard time. Today it gapped down. Now what I should have done is waited. I bought $10 puts right here thinking that it was going to stay down. Excuse me. I averaged into my $10 puts here. I'm not saying I was smart. Other bears were panicking here, and so I grabbed 2 more $10 puts, got my average down to $14, or 14 cents, whatever you want to say. So 14 cents for 4 contracts. And then I realized it's really struggling here. I grabbed a 1050 put, and I should have fucking loaded up, because this was the ideal entry, you know, into this. It's not a washout. I don't know what you would call that. Selling frenzy. I don't know. It's into that little peak at resistance. You know, it was just above the green to red level. It was below all of this consolidation. Again, after hours consolidation, but consolidation nonetheless. It was after the bounce. And it had all of this resistance overhead. You know, this is obviously support, bad place to go short. This is resistance, good place to go short. Bad place to sell, good place to sell. That's, oh man. So anyway, I did the right thing, kind of, and I grabbed 1050 puts right in here. I sold them early because I was all messed up. I sold my $10 puts for $5 each, and I sold my 1050 put for $30. Excuse me, for $50. I got it for 20, sold it for 50, so that's not the worst. And I just really hosed myself. So, but that's why I'm trading small. That's why I have E-Trade set to grill me anytime I try to trade more than one contract at a time. It's like, really? Are you sure? You said not to let you do that. Please confirm you want to do that. So, and that's so that I can kind of mitigate these disasters, So, because these little mistakes that are inevitable as I learn, could be monstrous disasters. I lost $50 today. That could have easily been hundreds of dollars. And I did not let that happen. So I'm proud of that. I got to be better at cutting my losses. I got to be better at timing, you know. I got to be better at patience. MVIS, I wound up selling those for $5 right before it cracked 5. They were worth, $15. I could have, cut my losses in half just with a little bit of patience. And of course, you don't know these things are going to happen, but you can see with reasonable certainty that this is a top. I call this a Batman. So MVIS had a Batman. It was unable to reclaim these highs, right? Came up, got stuffed. This would have been a great short opportunity if you're into that. Got stuffed, couldn't come back, faded. And it's already, way off its highs, or way off its support. It's off its base. So just timing. I feel like I'm on the right track. I have the right ideas, and I really need to work on timing. So that's what's up. And and zero DTEs are a B word. I think that if I'm going to trade zero DTEs, I need to go with something that's way closer to being in the money. Excuse me. For example, I think MVIS had 550 contracts, right? That would have been perfect. Grab some zero DTEs 550s into this push, sell them into this pull, stack tendies. I'm not upset. I feel like I'm really onto something. I feel like I've found my calling. Call me a masochist, call me a pessimist, call me whatever you want, but I think that if you're buying MVIS in the 5s, 25% away from its support, you can call me whatever you want because I don't think you're right. But apparently, these guys were right. They got the squeeze. And maybe that's what they were looking for. I just hope no one is long-term investing at these heights. So, all right. Thanks for listening. Look forward to sharing my awful Chris trade. These are all very good lessons that I'm enjoying. And it's like when you finally see something that you think you could be good at, and then, like, I feel it. I feel that I'm on the right track, and now I just have to fine tune my approach. And and then we gonna get it. We gonna get it. All right. Have a great weekend. I hope you're studying. You should read a complete guide to volume price analysis. If you don't read that book, it's probably because you hate money. Bye.